In this video we are going to talk about dividend stocks to watch. So before starting, please like this video and subscribe to this channel for our future updates. The stock market has been tumultuous recently, to say the least, due to the ongoing conflict in Ukraine and the Federal Reserve's planned rate hikes. As a result, some investors may be shifting their focus to dividend-paying companies in recent months. For starters, organizations that pay out attractive dividends are more likely to be well-established and profitable. Dividend payouts are another source of income for investors. Fortunately, there are many corporations in the stock market that pay quarterly dividends. For example, Applied Materials, Nasdaq, AMAT, recently announced that its board of directors approved an 8.3% increase in its quarterly cash dividend from 24 cents to 26 cents per share. This is the company's fifth consecutive year of dividend hikes. In other news, American Express, NYSE, AXP, approved a 20% increase in its quarterly dividend. With this in place, the business now pays a 52 cents per common share dividend, up from 43 cents previously. As a result, if you're searching for a safer bet right now, it might be worth checking out some of the top dividend stocks on the market. Number 5. IBM. Whenever people think about which dividend-paying corporations to invest in, the moniker International Business Machines is one that comes to mind immediately. Anyone who is unfamiliar with the organization should know that it operates in three different business segments: cloud and cognitive software, global business services and systems, GBS and AMPS, and global financing. When it comes to progress, IBM is a fervent believer in the possibilities. A dividend has been handed out by the technology behemoth on a quarterly basis since 1916, and the payment has increased for a total of 26 consecutive years. It now offers a dividend yield of 5.3%, which is higher than the industry's average. A few days after releasing the above statement, IBM said that it is allocating a significant portion of its resources to assist businesses around the Asia-Pacific region in preparing for cyber attacks. The IBM Security Command Center will be the first of its kind in the region, and it will be used to train people in cybersecurity response procedures. The IBM Security Command Center will be located in the IBM Global Technology Center. Because of this, organizations are able to mimic very realistic cyber attacks in order to better prepare for potential future attacks. It should also be noted that the corporation will construct a new Security Operations Center, SOC, which will be incorporated into the company's broad worldwide network of existing SOCs. As a result, it's possible that IBM stock is one of the best dividend stocks to buy at the moment. Number 4. Verizon. Verizon is a technology company that offers products and services to its customers in the fields of communications, information, and entertainment. Mobile services provided by the corporation, which are widely available throughout the United States under the Verizon name, are well known to the majority of the population. In reality, at the end of the month of February, Verizon declared a quarterly dividend of 63 cents per share of common stock that was then in circulation. Dividends paid to shareholders have increased every year over the last 15 years, a trend that has continued into the present. Verizon has also stated that its members would have exclusive access to the Plus Play service, which was previously unavailable. A new platform that allows consumers to find, acquire, and manage some of their favorite subscriptions all in one convenient spot has been launched by the company. According to the firm, by 2024, the average streamer would have more than 5 subscription providers to choose from. Plus, it might make it easier to manage subscriptions while also making it easier to discover new content. Has this led you to add VZ stock to your watch list because of your research? Number 3. Global Partners. Following that, we'll take a look at the market for Global Partners, GPs. In most cases, the firm owns and controls terminal networks that transport refined petroleum products and alternative fuels, according to its website. Wholesale, gasoline distribution and station operations, GDSO, and commercial are the three business segments that the corporation operates in. Earlier this month, the firm presented its results report for the fourth quarter of fiscal year 2021 as well as for the whole year. Its overall revenues increased by nearly threefold to $4.1 billion, more than triple the amount collected during the same time the year before. Furthermore, the company declared a quarterly dividend of $0.585 per share for the quarter, representing a 1.7% increase over the $0.585 dividend paid out in the previous quarter. Aside from that, Global Partners purchased Miller's Neighborhood Market in February of this year for an undisclosed amount. This is part of the company's ongoing efforts to expand its retail presence in the Mid-Atlantic region, which began in 2012 with the acquisition of a retail store in Richmond, Virginia. There are 23 convenience stores as well as fuel supply agreements with 34 locations, the majority of which are in the state of Virginia, included in the transaction. This strategic location selection will enable the company to better capitalize on its scale, supply relationships, and integrated strategy, according to Global Partner, resulting in enhanced product margins at every level of the value chain. Is it necessary to keep a close eye on GLP stock at the moment, after taking all of the above into consideration? Number 2. Williams Companies. Global Partners and Williams are both energy companies that pay out a respectable dividend to their shareholders each year, similar to the case with Global Partners. On a purely financial basis, the company handles 30% of the natural gas consumed on a daily basis in the United States. This encompasses everything from applications that heat our houses to those that cook our meals as well as those that create electrical power. The company declared a quarterly dividend of $0.425 per share last month, increasing the dividend yield to 5.09%, an increase from the previous month's dividend yield of 5.08%. A Barclays analyst also said that he kept his overweight rating on WMB stock and set a price target of $34 for the stock in a report. Take note that the stock's value has increased by approximately 20% just this year. After all, Williams is coming off a fourth quarter performance that set a new record and piqued the interest of a number of financial analysts. According to the company earned a total of $621 million, or 51 cents per diluted share, during the third quarter, representing a more than 400% increase over the same period the previous year. Other achievements included breaking records for contracted transmission capacity and natural gas gathering volumes, among other things. Is it possible for you to see yourself making a long-term investment in WMB stock in the near future? Number 1. FSK Capital. FSK Capital is the last, but certainly not the least, of our businesses. To put it another way, the corporation is a closed-end management investment company that is managed by an outside party. In terms of investment objectives, the corporation seeks to earn current income while simultaneously pursuing long-term capital appreciation. Examples include investments in senior secured loans and second lien secured loans to private middle-market enterprises in the United States of America, which constitute the majority of its portfolio. Wells Fargo analyst Finian O'Shea raised FSK stock from an underweight rating to an equal weight recommendation earlier this month, marking the first time the stock has received this treatment. In February, the corporation announced strong fourth-quarter financial results, effectively bringing the year 2021 to a successful finish. Over the course of the quarter, it achieved substantial progress toward meeting its net investment income growth objectives, with over $2 billion in new investments contributing to this success. Between now and the conclusion of the fiscal year, the company's net asset value climbed by 8.6%, and it distributed $2.47 per share in dividends to its shareholders. In terms of yield, this translates to a 9.2% return on the company's average net asset value. A broad view of the organization suggests it is well positioned to retain its current momentum through to 2022 and beyond. As a result of these considerations, would FSK stock be a smart investment at the current moment? What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.